different level of government. We have a federal government, we have a state government, and also all of the government have their own transaction. So the state can use their own accounting system or not. So therefore, we need to understand on the basic principle of that matters on the environment. So actually in Malaysia, accounting is a federal matter. So means that power. So therefore, with that, state, local government or whatever agency, they need to follow the instruction provided by the federal. And then who are the principal authority on the accounting matters? This is the accountant general. So because once they are under the federal, in the federal we have a treasury, and under treasury we have the guideline and also the standard imposed or provided by the accountant general. Okay, so even at the state have their own accountant, state have their own treasury, but they need to follow. So they need to follow. So therefore, when we discuss on the accounting, normally federal and state, we are discussed together because federal and state follow the federal. So there is no much difference. But come to the agency. So agency, because agency, we have the agency who are uh, enjoy the autonomy power. So those agencies who are enjoy autonomy power, they do not follow 100% of the instruction by the accountant general. This is due to the different accounting basis that being adopted by this particular agency. So therefore, accountant general responsibility among them is to provide guideline to standardize the accounting practice. Means that when we talk about accounting practice, it include the principles, the basis, the convention, the rules, the regulation, and the procedure. So means that uh, in order to practice what we want to record and so on, we need to refer to this particular principle, basis, and convention provided by the accountant general, regardless where you are, either at the federal or at the state. So except for the, as I said, that agency who are enjoy the autonomy power. Okay, so and then the second thing is financial accounting practice governed by the rules, law, and regulation. So this is also aspect that you need to be careful, because if you treat like in the private sector, so they are not based on the rules, law, and regulation, um, because they are more toward based on the accounting standard. Okay, and then the next is controlling officer. So we found out that previous topic we already talked about the controlling officer. So controlling officer have a power to exercise. Means that the power of the controlling officer for each of the agency are to overlook, to look that matters. Okay, so therefore I listed some of the aspect who influence the accounting environment in Malaysia. For example, on the FPA 1957, this is a procedure on the accounting and uh, um, on the collection, custody, and payment of the public money, and purchase, custody, and disposal of the public property. So this matter not just talk about them recording, but talk about them financial and accounting procedure, or we talk about including the management in term when we're dealing with the in the collection, what are the procedure need to be followed. So, and then also related with the procurement, custody, and write-off of the public store, because this is among the transactions that are very, very significant. Uh, And then on the accounting standard, so this is a procedure that related with the recognition and treatment. So recognition and treatment normally provide through the accounting standard. Okay, so this is the aim of the financial accounting compliance. Of course, in the government, whatever we need to be based on the two, compliance and performance, and also a decision making. Okay. Okay, so let we look on the this is a specific legislation. Specific legislation means that whatever aspect we talk about the accounting, we need to be based on there. So therefore, I encourage you to have the rules and regulation, because you need to refer several times when you want to dealing with that. So why we need to refer to this? Because you see that Article 97, we already talked before in the budget, we already talked. In the topic of the rules and regulation, we already talked. So this is the basis for the accounting practice. So we say that later when we talk about the nature and we talk about the features, one of the features of the accounting in public sector is fund accounting. So, and then we do ask, why fund accounting? To answer the question, why fund accounting? Therefore, we need to refer to these sources, because in the constitution, we already thought that the government need to be established the fund, that namely the consolidated fund, for the purpose to account all the receipt and for the purpose of the withdrawal of the money. So therefore, by whole by crew, government need to be operate based on the fund accounting. So this is to ask to solve the question when the people ask, hey, why the government need to use fund accounting? Because this is a requirement by the constitution. Constitution required to practice fund accounting, not just because we are what for we are for, or we are feel that fund accounting is suitable or whatever. Okay, that is the first one. The second one is Section 7 FPA. Under the fund accounting, we need to establish three different consolidated accounts. Means that the law have provide the brief idea on how to practice the financial accounting. The first one, we need to have a one fund, and then inside that fund, we need to have a three separate account. So that is the basis we need to understand. So previously, you may just look from the law, But this is from the practice. In practice, we need to keep that. So when we need to keep that, means that once we deal with the transaction data, so let's say we have a transaction, let's say we talk about the inflows. So we talk about the inflows example. So inflows of the government, one of the inflows of the government is we say that collection or receive a revenue from the tax. Okay, if from the tax, so this is a very general tax. It may be indirect tax or direct tax. So let's say we have a collect a revenue amounted 3 million from the direct tax. So the next question is, as an accountant, so how do you deal with that? How to record? So how to record? And what are in your mind? Who want to respond? Maybe Mariam, Anuru Mariam. Can you respond on that?
Yes, Prof.
Ah, I give example. You get my example?
Can you repeat it again?
Ah, so let's say government collect the money 3 million from the direct tax sources. So how to record that transaction? Or we just ignore?
No, we should not ignore it.
So we need to record that.
Yes.
Okay, how to record?
The government get the tax, so we can record it for revenue.
Huh?
Sorry.
So how to record? What are the journal entries of that?
Original entries. Okay. Um,
Because record the journal entries lah. Can we talk
yeah.
about accounting? Record what? Of course, journal entry is it?
Yeah. Debit tax revenue.
Debit tax revenue.
Okay. Credit. The money came from the public, right?
Money, never mind, come from what we call it based on the direct tax.
Debit tax revenue.
Debit tax revenue.
Okay. Debit credit. The tax came from
Credit apa?
mm, if the tax came from like uh the income tax of the public, can ka, Doctor?
So, okay, never mind. So what is you said debit tax revenue, credit what?
Mm,
Credit what account? Which account we need to be credit?
Credit.
Okay, I give you time, Marian, to think about that. We pass to Aina. We try ask Aina. After that, Mariam can respond after you have a complete journal entries. Aina, Aina, are you hear me?
Yes, Doctor.
Ah, Ni basic journal entries ni, Aina. You learn in the first paper in accounting first semester. You already learn about journal entries, is it?
Yes.
So very simple.
Um,
This is a basic question.
maybe debit money and
Debit
credit
money,
tax revenue.
debit cash lah, you means.
Yes.
Debit cash,
Credit tax revenue.
credit tax revenue. Okay, you complete your journal. Back to the Mariam. Mariam, what your journal entry?
Yes, doctor.
Ah,
Yeah. Uh, since the revenue come from tax,
ah.
like Aina said just now, which debit, cash, and credit revenue, which is specifically tax.
Oh. But tax. We talk about about direct tax, not indirect tax.
Direct tax. Mm,
Can because we already learned before that tax can be classified into direct or indirect. Okay.
Okay.
Yeah,
Um,
fine. I left to you to think that I will not provide that methods because later to answer this question later we may look on the example and then from there you can learn. But I try to explain to you. I just give to you that the simple transaction like that, if we are omit all the basic thing, so you start trouble. You will start trouble. Aina answer partly right, but when come to the reality, Aina answer is totally wrong. Nurul Mariam, of course, not complete yet. Uh, and then in the first answer, she already trouble because she talked about that. How can revenue be debit? So this is totally wrong. So because therefore, a simple example like that, it will threat you if you do not understand. So that is important for you to look each of the basic thing that I have listed in the textbook or in the lecture note. Because later we can understand, for example, Aina, why we credit the tax revenue? Because you learn that info I given to you that the collection are made based on the direct tax. So not the tax revenue, but direct tax. This is more specific. Okay, and then what I have the main mistake by Aina is uh, she do not follow the section 7. So she did not follow the section 7. What I had talked about. So means that the first section 7, you understand that in the consolidated fund, we already have a 3 different account. So the next question you should ask is, so your journal entry, let's say we take it the answer by the Aina, debit, cash, credit, revenue from tax. Okay, so this journal belong to which account? If you are not you do not mention. If we have only one transaction, is no problem. But in the government, you always understand that the activity of the government is very large, and then we have how many organization, how many agency, how many ministries, how many department, and then how can do you manage if you do not follow this method. So therefore, you need to read carefully and understand. So the first we have the CRA, CLA, CTA. So which uh, 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 um, um, account belongs to? You want to charge to which account for the journal entries. So because at the end, we need to keep 3 accounts. So therefore, you need to follow the section 7. Okay, and then section 9, section 11, which is talk about the trust account. And then we have a lot of trust account. So those who have a textbook, I think, Aina, you have a textbook, Aina?
Yes, Doctor.
Okay, can you open on the page 5? Page 5. And then the class, you open page 5. You can see that the diagram in the page 5. Okay, on the page 5, can you uh, give example of the trust account here under the section 9?
Deposit.
Deposit. Okay. Yes, deposit. What are the purpose of deposit? And then you can see that deposit we have two, is it? Two account on deposit. Aina, that you can see deposit we have two account deposit, is it?
Yes.
So what are the different?
Uh, I'm not really understand.
Pardon?
I'm not really sure what is the difference.
Uh, but because I do ask this is the simple, because later on, let's say we have one transaction related with the deposit, and then you will start ask which deposit account we need to deal with, because we have a two. If we have only just one, let's say we have two Aina Salwa, so we need to be specific. So which one? Uh, um, Aina Salwa 1 or Aina Salwa 2? So this is what I try to stress to you, for you to go back and then read the FPA carefully, because here the purpose of this topic is for you to practice what have been previous topic. When we already discussed this in the topic rules and regulation. On the topic on regulation, we just try to identify what are the requirement of that. So that is a different. Therefore, please do not say that, oh, we are repeated the same thing. We are not repeated the same thing, class. We are talk about the here. You need to read section 7, section 11, and so on for you to practice. Because later on, when you have the transaction, let's say one transaction, we talk about the government receive a deposit for the purpose of the amount. So how to deal with that transaction? Where you want to record that transaction? So that is come to the practice. Therefore, this topic we say about financial accounting practice. So in order to ask or to solve your problem related with them, what should we treat that transaction, which account need to be involved? So you need to read that particular section, because that section give us the clue of that. Okay, so that is, don't worry, because here I just give from the theoretical conceptual perspective. But this is important as a basis for you to understand, because later Actually, the practice is very simple. I just show, I can show to you, debit this, credit this, debit this, credit this, and then some of you maybe have a tendency just to accept that matters, and then you just remember, just make an exercise. But come to the question, when I give you question full detail about the transaction, so you start trouble. This matter, what should we debit, what should we credit, and then how, and then what for, what are the reason? So to answer all these matters, so therefore you need to understand the theoretical conceptual first. Okay, so this is more on the more detail about that matters. We have also, beside the rules and regulation, we also have a supplementary regulation and accounting standard. So normally supplementary regulation and accounting standard is more toward on dealing to the specific requirement, uh, such as we want to provide a quality financial report. Uh, so that is the main thing of that. But the basis, it must come from the what we have been discussed before on the rules and regulation. Okay, this is for those who don't have a textbook. Um, Basically, this topic, if you understand this diagram, I can see that 70% you can able to make a journal entry. If you unable to understand this diagram, uh, I can see that you may have a trouble in understanding this topic. Okay, so this diagram actually represents so many things. So the first one, if you look on the this consolidated fund, this is under the article 97. Means that the first thing, it must come from there. Therefore, you can see that the arrow, uh, the arrow go to consolidated fund. So this is we call the inflows. So because accounting are dealing with the inflows and outflows. So, but you can see that there are three different main sources of the inflows. So you can see that this is, you can see here, direct and indirect tax, income, that is not informed, income from investment, that is, you can see, and then the arrow goes to consolidated fund, deposit, trust, recoveries, advance loan, go to consolidated fund. And then here, domestic borrowing, external borrowing, go to the consolidated fund. So this is at the top, this is we call the example of the inflows to consolidated fund. So if you look from there, you can see that when it is the inflows, of course, what should we debit, what should we credit? So we need to debit the cash. All we need to debit the cash, because this is the inflows. Why debit the cash? Because we are practice the cash base or modified cash base. Okay, and then you can see that the second below the consolidated fund, this is the implementation of the section 7. So consolidated fund, they have the revenue account, trust account, and loan account. And you can see that the arrow below, arrow from revenue account, arrow from trust account, arrow from loan account. So you can see that this arrow we call the outflows. Where the outflows goes goes to charge, goes to a supply. So charge and supply, that is we call the budget. And then trust account goes to the deposit, public trust, government trust. So this is public trust, government trust. This is under the section 9. Section 9, you can see it. Previously, I show you section 9. So for those who have rules and regulation, open section 9 on the FPA. And then you can see that this is the way how to use the sources when we want to understand this. And then housing loan, development fund, and then sinking fund. Okay, and then you can see for the outflows from loan account, uh, they have namely transfer, loan repayment. So later on, when you have all this matter, if the transaction related with that, so you need to understand, oh, if let's say talk about the deposit, let's say the government pay back a deposit, so which account we want to charge, not which account debit to credit. First we need to understand, because from the consolidated fund, sorry, Article 97, we need to read together with the Section 7 FPA. Consolidated fund not just stand alone. Consolidated fund need to manage into 3 accounts. Means that what have been inflows and what have been outflows need to be charged to the right consolidated account. For example, you can see direct, indirect tax, investment, and so on. Oh, all of these inflows need to be charged to the revenue account. And back to the example I do as Aina before, Aina provide that is debit, cash, credit, tax revenue. Your general right, but as I said that your full journal entry is wrong, because you do not identify that journal entries belong to which account. Belong to which account. So you should provide that, oh, that transaction are charged to the revenue account, consolidated revenue account as required by the section 7. So why we need to charge to the consolidated revenue account? Because the transaction that relate with the revenue come from the tax or from whatever sources that in the name of the revenue, that is the transaction belongs to consolidated revenue account. Belong to consolidated revenue account. One of the account need to be managed under the consolidated fund. Under the consolidated fund. Okay, so that is the I just give a general example for you to understand. So that is on the inflows. Inflows ni tak banyak lah, not so much. And then inflows is more, a little bit straightforward. Okay, so we talk about the outflows. So the outflows. So the outflows, first, in the very basic, as I discussed before on the budget. So we prepare budget. One of the purpose of preparing budget is to withdraw the money from the consolidated account. And then the budget need to be comprised of the cash expenditure and supply expenditure. So therefore, when we prepare the budget, we have the supply and cash expenditure. Supply and cash expenditure need to be charged to which account. So you look on this, you can see that, oh, actually when we prepare budget, both charge and supply need to charge to the revenue account. So means that if we have, let's say, among others under the supply expenditure emolument. So when we deal, let's say, we pay the emolument for the government servant amounted to million. So what are the journal entries? We will debit the emolument and credit the cash. But it's not straightforward like that lah, because we have another two step of that. But basic like that, and then that journal should be charged to the revenue account. Should be charged to the revenue account. And for the budget as a whole, we will debit the revenue because we have expected revenue, and then we will credit the expected expenditure in total, and the balance between the revenue and the expenditure will be charged to the fund balance. So that is a straightforward. A second, you can see that beside the straightforward come from the budget, we also have um, the outflows from the consolidated revenue account, namely contribution. So contribution. So let's say I give example, a government approve a contribution to the housing loan fund for the year 2022 amounted 2 million. So how to deal with that? What are the journal entries of that? So this is a more difficult as compared to the first one, because this is not straightforward. But never mind. As I said that this is I just give to you for you to understand this diagram. Later on, we can see that example is of that uh, in detail. Okay, and then you can see another. This is the name is transfer. Transfer, which is the transfer. This is also not a straightforward because it comes from the loan account to the consolidated trust account. So in simple, I always request you to look this diagram carefully. Please look with your heart, not with just your eyes. Because from your heart you will understand what are inside of that. If you just look from your eyes, you just look on the what have been appear. Okay, so um, this is the purpose of the financial accounting. Purpose of the financial accounting. So we have, if you talk from the very basic, all the accounting, sorry, all the financial management activity, we just have two main purpose: meet legal and accountability. So when we prepare the budget, the same thing when we talk about the reporting letter, same thing when we talk about the audit, the same thing. So because this is the what we say that the basic purpose of the financial management to meet the legal. So therefore, in every activity, I provide you the legal to support that. So in simple, we do ask why we need to do like that, why we need to, let's say, establish consolidated fund, and then account need to be divided into three main consolidated account. So all this matter are purposely to meet, because this is the what have been say through the regulation and through the law. So and then In anything, following the law is the main thing. And the second, why we need to do carefully, why we need to have a very detail of that. This is because to meet or to provide the accountability. So we need to understand back to the basic first chapter. Um, the government is only a steward, not the owner. The real owner is the people. So when you are as the steward, you need to be sure you're accountable on the task duties that entrusted uh, to you. So if the owner, there is another question. Therefore, in the private sector, there is no much issue because this is come from the owner of the organization. But public sector, they are only the steward. Okay, and then this is a characteristic. Characteristic. The first characteristic, most of the transaction that we deal in the public sector, they are non-exchange transaction. Non-exchange transaction. So what are non-exchange transaction? Exchange transaction, we will look later when we talk about the detail of that. Okay, and then second, main sources of their revenue through taxation. So through taxation. When through taxation, you need to understand this is the mandatory involuntary transaction. Uh, so we are not talk about the what we call give and takes, or we say about the fair value, because this is involuntary transaction. Automatically, it is show that no fair value. The second is on the third is on the primary reason for holding property. Uh, so this is, if you look from this, what are the related with that? Later you can see that what are, because let's say we talk about the when we buy the asset, fixed asset. Let's say we buy the machinery, the plant. If you practice or you remember what are the journal entry in the private sector, most of course you will debit the asset in terms of the free asset, and then you will credit the liabilities, or if cash. But the asset, when you record, you need to show the value of that, and then on yearly basis, you will deduct the value due to the depreciation. Why? Because you want to matching. You want to mesh between the um, um, what we call benefit uh, um, generated from the asset and the cost that need to be uh, meshed between that matters. But in the government, the primary basis in holding property or plant not for generate the income, not for generate the income. So therefore, we do not, we do not treat like in the private sector. We do not mesh between the inflows and outflows. We do not mesh on that matters because the purpose is to provide good and service. Good and service, we are not just the people based on the cost. So therefore, you can see that in the government agency, you can see that they have a lot of very good building as compared to the private sector. Private sector, they have, maybe some of the private sector don't have the office. They just work in their house, for example. So this letter, you can see that when we prepare, or you can see when you look on the report letter in the next step topic, basically to understand this topic well, you also need to refer to the next topic on the reporting. So you can see that what are account appear in the report, and then you start asking why they appear is account like this. So and then you can see that oh, therefore why we need to understand the this particular basic thing, or what we call the particular theories on this matter. Okay, and then this is the nature. Nature also influence. This is the example, one of the that you need to be careful. Benefit from all disbursement will expire in the year of disbursement. Uh, so expire in the year of the disbursement. So means that why the amount had been approved in the budget for the 2022, for example, will expire at the end of the year 2022. And then what happen if we have the balance? What happen if we have the balance? What should we treat on that matters? This is another threat for the student who do not uh, uh, um, careful about that. Some of the transaction, they are not directly given, but um, just given through the um, 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 another additional information. Uh, okay, and then full disclosure objective. Okay, another thing is on the cash budget and cash accounting. So budget and appropriation have a cash base and show the sources, allocation, and use of the resources. So this is another thing in the government where we are based on the cash budget. So based on the cash budget and cash accounting, later we can see on the implementation. Okay, on the futures, first on the budgetary accounting. So budgetary accounting, which is the practice of the budgetary accounting. Um, as I said to you before, practice through the books. That is the budgetary accounting record. So budgetary accounting record. So why we need to have this record? Because to make sure that institution or agency are trusted with the management of the budget resources. So that is the first. The second, spending made for a specific purpose set out in the budget and defined in a sufficient detail manner, object by object. So determine object by the object. So in simple, when we talk about the journal entries in the government, so we need to have a two journal entry every time, every year. So first we call the budgetary journal entry, the second accounting journal entry. So budgetary journal entry, as I do mention in the previous meeting, so we cover in the end of the uh, budget practice topic. So which is, but I do not give the emphasis on that. I say that you, if you want to know, you just read on that matters. Second is we have the accounting entries, which is we are learn in this topic, the accounting journal entries. Okay, so the third, fund accounting. Ah, so that is by theories. What are fund accounting is resources of income or inflow, as I show you in the diagram before, are segregated based on the fund or purpose. Uh, so let's say we say that um, revenue collector based on the director. So what are the purpose of that revenue? We do not mention. So when we do not mention, it means that it is for general purpose. When it is for general purpose, so we need to account that inflows into consolidated revenue account. On the other hand, if let's say we have the income collected through a deposit. Deposit. Deposit, what means deposit? Deposit means that the amount that paid by the depositors. Okay, before that, please do not confuse. The term deposit here not meanings of the deposit account that you open in the bank. So like a deposit account you open a bank, because I'm sure that some of you always use the Google to understand some of the terminology. When you Google, they will provide you a definition of the deposit. So one of the definition they say that this is the account that being uh, uh, created by the bank to accept the deposit by the saver. So please understand the deposit here not means of that. This is totally different. A deposit is amount, and then a best example. I think you always deal with that when you first time come to UUM register as a student UUM. So you need to pay a deposit. One of the fees under the uh, uh, payment that you need to be paid beside the tuition fees, accommodation fees, and so on. So you also have one item, namely a deposit. So that deposit, this is a best example of the deposit received by the government. And deposit, this is a specific because the purpose of deposit, this is as what we say that as um uh like a contingency, uh, like a contingency. Um, just a purpose of that, because if you made some damage of the um, university asset, for example, when you grade before you combo, so you will get back your deposit. um, so when you want to come to the convocation, so normally the UUM will provide you one form that whether you want to claim or not your deposit. So some of you maybe not remember, we have a money, but some of you who are cares about that, they are remember first time come to UM, because we still freshy, and then one of the item that we are paid is a deposit. So deposit is a specific purpose. Specific purpose, all the specific purpose, income for the specific purpose need to be charged to the trust account because it's a trust account. So this is the fund accounting that we are practice. And vote accounting, this is a very close with the uh, um, budget accounting and also the environment, very close with the environment. So vote accounting. Okay, and then on the basic concept and the rest, I think we will continue on the next meeting on Monday, inshallah on Monday. Please look at the textbook on the page 23 to page 35 on the example, because next Monday I think we will look on the practice of that matters. Okay, so with that, I think that all for today. We are stop here. Any question on what we have discussed today?